Guys, it may be a surprise to some of you, but interest rates here in Canada, the Bank of Canada decides these interest rates, they've increased 10 times since March 2022. So basically, over about 1 year and a half, we've had 10 increases from the Bank of Canada to our interest rate, which has impacted so many different things. And I'm sure you see it when you go to the grocery store, when you go just buy regular things are way more expensive than they were before. They're increasing interest rates in order to battle inflation and get it down to their target rate. It has impacted some people with mortgages today, but it will be impacting people with mortgage renewals coming up as well. And this is what we're talking about today. So if you've been in a variable mortgage over the last couple of years, you have already felt the impact of increasing interest rates. I am one of them. In fact, here's a thumbnail of a video that I just made not too long ago talking about how I sold my Toronto condo, and one of the main factors was the fact that the variable rate jumped so high that my payment went up so much. I had to cover about $1,300 per month in order to keep that property because my rental income was not covering the expense after this interest rate change. So I'm not going to get into that in detail at the moment. You can definitely click on our other videos to see how that all broke down and the reason why I did that, and the reason why a lot of people are actually thinking about selling right now too. And of course, like I said, if you're in a variable mortgage, you 1000% know what I'm talking about because you already feel it. You're living in that moment already with increased monthly expenses. But there's a group of people that are a little bit under a rock right now, possibly, or they're conveniently ignoring all the interest rate noise that's been going on around them because they likely got into a rate that's very, very low over the last couple of years, and they have not felt this at all yet. Now, I know this because I'm in the real estate industry and I have real estate conversations all the time. So I can tell you for sure that there's some people who got into fixed mortgages back in 2020, back in 2021, under 2% that are still benefiting from that low rate even today while other people are suffering. They have a little bit of a delayed pain, I would say, because they do not know or have felt that mortgage impact the way that others already have. Well, I hate to be the bearer of bad news, guys, but you guys are in for some sticker shock. Now, let me put up a couple screenshots to illustrate my point. I'm gonna put up the 2020 discounted rate for 5-year fixed term. Here it is. And it was a whopping 1.64% to be exact. Let's flip the page here. 1 year later in 2021, guess what? There was a bit of up and down through that year, but we landed at 1.64% again in 2021. So if you were to get into a new mortgage in 2020 or 2021, around this time, fall, you would have benefited from a 1.64% rate. That's the best rate, so obviously it's all unapproved credit, but let's pretend that that's what you got. That's amazing, and I'm super jealous. Enjoy it while it lasts. So there's a lot of you who have benefited from this particular rate if you bought at that time, and you're benefiting from it even up till this day. Super jealous because rates are way higher and payments are super high. But these people have been benefiting from this low payment this whole entire time. Now let me flip the script here and show you the discounted rate of today, September 2023. Let's put it up. So as you guys see here, our current discounted rate is 5.24%, which is a whopping 3.6% difference than it was 2 years ago. So it's a drastic change. Now that's all good and well. 3.6% might not mean much to many people, but when you have like a $800,000 mortgage, $1 million mortgage, a $500,000 balance in your mortgage, that 3.6% starts mattering. Okay, so what does that look like on a monthly basis? Let's take a look. Now, I'm sure you can guess by now that it's going to be more. I mean, the interest rate was 1.64 before, it's 5.24 now, it's higher by 3.6%, so it's definitely going to be higher, the payment, than it was back 2 years ago. But let's take a look at detached home, a detached house, just to kind of illustrate this point from you. Let's see what the average price point was back in 2020. So the average price of a detached home back in September 2020 was $1.184 million. Let's take a look at that number just as an example. And these are the other terms that we're going to use. It's going to be 20% down payment on that $1.184 million home. We're going to use 30-year amortization. We're going to use $3,000 in taxes, $65 in insurance. We're going to use $350 for utilities. And this should give you a really good picture as to that total monthly payment, including all expenses for housing. And of course, we're going to use the discounted rate of the time, which was an amazing 1.64%. How did the numbers break up? So remember, I bought a property here at $1.184 million. It's a detached home, which was the average detached price in the GTA back in September 2020. I put 20% down, which is a down payment of $236,800. Gives me a balance of about $947,000. My interest rate was 1.6%, like we said. It's a 30-year amortization, and we have $3,500 a year for property tax. We have $350 for utilities and about $780 annually for insurance. That all breaks down to $4,037.09. That in this day and age, for a $1.184 million property, I think is pretty bearable. I think we can find a lot of people who'd be able to, handle $4,000 a month on a housing expense, especially with a combined income. That's not bad. That actually sounds okay. And that's how it looked like with 1.64%. Now let's switch it, just keeping all the numbers the same except for the interest rate, and let's see what the change is. Now remember, today's discounted rate is 5.24%. So I left everything the same, $1.184 million home, obviously the same down payment with 20% down, 30-year amortization, property taxes are the same, the utilities are the same, and also the insurance is the same. All we changed is 1.64% interest rate to the 5.24, and the total difference is quite a bit. The new total is $5,898.31. Now this is a difference of, let me just do the math here. So we have a total difference, guys, of $1,854.22, keeping everything the same and just changing the interest rate. That's quite a bit of a difference, and this is just an example of what could happen. I know you're going to be renewing into a new rate. If you stay with the same lender, they might be able to, auto renew you into the new rate. But they're still going to have to abide by the Bank of Canada and also the bond yield rates, which impact fixed rates. So, we could still be in that 5% range even in a couple years from now, just to kind of give you an idea of how drastic that change can be. Now, I know that it's not going to be exact, and I know that's the case because you would have gone through 5 years of mortgage payments, which would have reduced your balance over that period of time. So the numbers are not going to be exactly the same. They should be a bit lower, if anything, because your balance is different, but it may not be too far off though. Hey guys, if you're finding this information helpful, do me a favor and subscribe, and also like this video. It helps the algorithm reach way more people than it normally would, and I know that people can benefit from this information. So if you do like it, help us out with that, guys, and continue watching this video for the rest of the info. So guys, the true intention of this video is just to bring this to your attention. I've talked to too many people over the last few months that had no idea that this was going on. They had no reason to take a look at the news or pay attention to interest rates and all that sort of stuff because it was not impacting them. They locked into a super low rate, fixed rate a couple years ago, and they're not thinking at all about renewing. But let me tell you, it's probably in your best interest to have it on your radar. And I'm going to talk a little bit about what you can do today in order to kind of minimize that impact later. You should definitely be aware of what's going on in the mortgage market because you've bought a home and you have a balance still, and it's going to be very difficult to clear that balance. But preparing yourself before that rate renewal comes is going to be really, really key for you going forward. Now remember, another point I wanted to make is that in the future, 2-3 years from now, when you're doing that renewal, it could be that the mortgage interest rate has changed. My hope is that it's going to be a little bit lower than what it is today. So even with the numbers that I'm showing you, taking into consideration that you've reduced some of your mortgage balance, it could be a bit different as well. We may not be in a 5% rate. Maybe we're in a 4.5, maybe still in the 5s, maybe not so high. There's a lot of possibilities, okay, guys, so keep that in mind. And let's talk about a few things that you can do today, again, to minimize that impact. So mortgage prepayments is one of them. Mortgage prepayments, your mortgage product may allow for you to actually make payments that are larger than what is required of you on a monthly basis, and that is actually directly reducing your mortgage balance. This could help because later when you do that renewal, you're going to have a smaller mortgage balance and it could reduce your monthly payments. Another thing is to just pay attention to rates. I know that you really didn't need to before, and the renewal seems a little bit far away at the moment, but keeping track of rates and keeping track of that news is going to be really key because when and if rates drop in the future to an acceptable level for you, maybe because things do fluctuate, that might be a good moment to just jump into a refi, even if it is a year early or 2 years early, all depending on what's going on. And to that point, you should be interacting regularly with your mortgage broker or your mortgage specialist at whatever branch you're at. This could also be very beneficial. You keep in touch with them, get them to understand that your renewal's coming up in a year or two. Any good bank rep is gonna maybe even be on top of that with you already. And just be aware that that's happening in the future. Ask your guy to keep you posted if any rates drop to a certain level, because it is possible that you can refi or do a change even before then the end comes and you're forced to make a change into possibly a product that you didn't want to get into the future. Hopefully those things were helpful, guys. And what is the silver lining here? Because I know it may seem like such a negative video. I would say that you guys are probably in a much nicer group than me and many others that are in variable mortgages. And the reason is because you can kind of see all this unfold with a bit of time. You're not under the pressure of some others with an increased monthly expense today. You're benefiting still from a fixed rate while others suffer, actually. And you can prepare for this renewal. You know that it's coming. You see what's going on out there. And if you didn't, well, now you know, because I explained it to you in this video. And there's a good chance that in the next 1 to 2 years, you actually might get into a lower rate than what exists today. That's very possible, depending on how things go. But I can almost guarantee you that rates will stay the same or remain high in the short term. So, many people who are trying to do things in the now might be a little bit screwed. Just maybe there's a better word for that, but it's not as good as other moments. And maybe in a year or two from now, when you actually need to do a renewal, we might be in a much better situation. Guys, if you need some strategy, if you need some tips, if you need to bounce ideas, if you want to know what opportunities are out there right now because of the mortgage environment, because of what's going on in a real estate market, right now I'm about to launch a video very soon of our monthly stats for the month of August. And we see the inventory rising right now. We see things sitting on the market a little bit longer than normal. There's opportunities out there depending on your situation. Everyone's in a different situation, so I don't want to assume anything. Get in touch with us, guys. Below is a link to our calendar where you can actually book an appointment with us to make just a quick 5, 10, 15-minute phone call. No pressure and no expectations, guys. I'm just here to help you guys out, and hopefully I'm able to do that for you. Again, it's Daniel from King Realty Group. We help hundreds of people moving in and out of here, the GTA area. We know what's going on here in our market. And we're on top of this mortgage thing and these rates. We gotta be. Okay, we're here to help you guys out. So you guys have a great day for now. Talk soon. Take care.